This looks like the Treasurer Wayne Swan is about to begin that press conference, so we will cross live to Canberra.
Welcome. I just wanted to deal with a couple of other issues first before we go on to banking and competition in banking, because I think everybody here is acutely aware that many Australians are suffering from flooding right around the country, and of course it's time for us to think about all of those involved. I want to pay tribute to all of the hard work of the emergency service workers, all of the volunteers that are working hard out there, and of course the ADF that are lending a hand as well. Also, I think we have a final outcome from Cancun. I think this is a well-balanced outcome, puts in place the building blocks for future negotiations, paves the way for eventually a comprehensive agreement. As you know, here at home we are committed to strong action on climate change. And of course, central to this is putting a price on carbon, a very important economic decision to secure future prosperity. And of course, we are here today also to talk about another aspect of economic reform. I want to talk about economic reform in our banking system, because the Gillard government has been determined to ensure that we have both a competitive and a sustainable banking system. It's absolutely central to our economic agenda. Now, there are three aspects to the reforms that I will announce today. The first aspect is to empower consumers, to give them the capacity to shop around, but also to help our smaller lenders to compete with the bigger banks, and also fundamentally to ensure that credit flows not just to Australian families, but also to Australian business. Now, I've been working quietly and I've been working methodically with our regulators on this plan for some time. I've also been working with my colleagues, Bill Shorten, David Bradbury, and of course my Cabinet colleagues, and I want to thank them for all of the effort that they've put into developing this important plan. I'm a believer in the fundamental importance of a market economy, because a market economy brings flexibility and of course it brings strength. But in a market economy, business and of course Australian households need to be able to get a fair go in the banking system. And this package is all about helping the customers, helping households and helping business, so that we can build up competition in our banking system, which will ensure that interest rates are lower over time. Now, smaller lenders play a vital part in this objective. We need our smaller lenders to be able to compete vigorously with the big banks, forcing them, if you like, to do better by their customers. And it's also very important that consumers are fully informed about the wide range of competitive deals that are on offer. That is, it's important that they know where to look. So therefore, it's also vital that consumers have the capacity to move around, the freedom to move around, so that they can get a better deal if they're not happy with their existing lender. So these reforms are very important, and it is important to get the reforms right. It's important that they are enduring, and it's important that we don't let the big banks off the hook. And it's also important that these reforms don't have unintended consequences. I have consulted, and the government has consulted widely over a long period of time about these reforms. I've done that personally as a minister. The Treasury has done that as an organisation speaking to business regularly. I've done it through my advisory committee, and we will continue to talk to industry about these reforms, and we will continue to consult them about the design and implementation of the reforms that I'm announcing today. Because measured reforms like these will secure the flow of credit to all households and businesses. But these forward-looking reforms will also harness our national superannuation savings so we can domestically fund more of our productive investment in our economy. Now, there's no silver bullet here. The global financial crisis did bring very serious challenges for our financial system. We can't solve all of these challenges overnight. We're talking about a $2.5 trillion sector here on which something like 200,000 Australians depend for their employment. So we need to move decisively, but we also need to move carefully. It will take time to build stronger competition in our banking sector because the impacts of the global financial crisis are still lingering. And of course, as you know, Australia came through the global recession with a strength that few other developed countries had. We acted quickly, we acted decisively. And when we acted quickly and decisively to put in place our bank guarantee, our deposit guarantee, and our wholesale funding guarantee, we secured the flow of credit to the Australian economy. And that was something that was a major strength and advantage for Australia. But we were not immune from the impacts of the global financial crisis. And the global financial crisis hit the smaller lenders really hard. And of course, that hurt banking competition. Why did that occur? How did that occur? It's important to understand this, important background to the development of the package today. Now, in the 2 decades prior to the global financial crisis, the rapid growth in securitisation as a funding source for smaller lenders was the key driver in substantially eroding the market power of the big banks. Major bank net interest margins were driven down, as you can see in that graph there, driven down from around 4.5% in the late 1980s to just under 2.5% before the crisis. That largely reflected the power of competition from our smaller lenders who were reliant upon securitisation. The problem, however, was that when the global financial crisis hit, Australian RMBS, which were backed by very safe loans in this country, suffered brand damage. And of course, investors didn't continue to invest in residential mortgage-backed securities in this country, despite the fact that they were a very good investment. So the contagion effect from the subprime loans used to back RMBS in the United States shattered the confidence of global investors, and they didn't continue to invest in residential mortgage-backed securities in this country. And as you can see in that graph there, the issuance of residential mortgage-backed securities fell off a cliff at the end of 2007 and through 2008. And that withdrew an important funding source, an important power for competition in the market from the market. And it basically hit the capacity of smaller lenders to compete with our bigger banks. Of course, that's why the government moved back in September and October 2008 to invest substantially in residential mortgage-backed securities. $8 billion announced in towards the end of 2008, and of course a further $8 billion announced in 2009. This investment has been absolutely critical in supporting the important funding market for our smaller lenders so that they have been able to continue to compete with our bigger banks. That initiative has been absolutely critical to reinforcing and sustaining the architecture of competition against the big banks over the past few years. And of course, in that environment, in the middle of 2008, you would all recall that we announced the introduction of a financial claims scheme in June 2008, which then was adjusted to become the deposit guarantee and the wholesale funding guarantee in October 2008. The announcement of, first of all, the financial claims scheme, then the deposit guarantee, and the wholesale funding guarantee of October 2008 gave 16 million Australians with deposits absolute certainty about their deposits. Those were critical decisions for the Australian economy and for the Australian financial system. And of course, those decisions secured the critical deposit funding for many of our smaller lenders, our regional banks, our credit unions and our building societies. And if you have a look there, you'll see just how dependent our smaller institutions are, our credit unions and building societies and our smaller regional banks, how dependent they are on deposit funding. If it wasn't for our financial claims scheme and our deposit guarantee, they would have had very substantial problems during that period and on from there. And of course, the smaller regional banks also accessed our wholesale funding guarantee. Smaller regional banks picked up something like $65 billion of wholesale funding, accessing our guarantee. If they had not done that, they would have been without funding during critical periods through 2009. The point I want to make about all of this and why it's important to go through the history of it is that the situation in Australia is entirely different from what it is elsewhere. Elsewhere, they're still talking about the sustainability and the survivability of their financial system. The reason we are having a discussion about how we can make our system more competitive is that the government strengthened the foundations of our financial system over the past 3 years, and today we're talking about further initiatives to make it more competitive. But what we have done in the past 3 years is put in place a range of measures that have given smaller lenders the capacity to compete with our major banks. Now, of course, you're all aware that in recent times there's been a debate about the big banks.